Hello and welcome to another episode of Investing Deplorables, the place for investors who feel unwelcomed in the markets. Today, in this episode, I want to talk about the goals I have for the year of the portfolio and my own personal goals. In addition to that, I'm going to be adding two new positions to the staple of this portfolio. So as of today, when we look at my JEP-E and JEP-Q positions, we can see clear as day that we have roughly around 15 cents from the JEP-Q as we take a look down here. And then when we go back and take a look at the JEP-E, we can see that we're making about 9 cents per month. And because I'm an income investor and want to have a nice amount of income coming into this portfolio, it is going to be our goal to get both of these positions to where they're paying a little over $2 a month for each. So overall, $4 a month on a consistent monthly basis. The small amount of income would feel fairly significant and can possibly give us a nice amount of pocket change to invest in other companies when the times are going bad and we feel like we do not have that much money to invest in for that week. So, so these positions should also create a nice buffer for the portfolio to minimize those losses during the bear markets. And then we also want to get about 10 shares of SCHD in the portfolio. So when we take a look at our SCHD, we can see that I have almost 1.5 shares, and we are up a small amount there of just 2.32%. The Schwab US Equity Dividend Income ETF is going to be a really good one for us to be holding. If we can get up to 10 shares, that should give us a nice amount of cash that we can start seeing our income growing on year after year. So with that, and I believe that this obtaining these 10 shares is very doable considering that we have roundups going to our SCHD investment. Plus, each and every week I plan on putting at least $1 or more into this position. So that is our current goals for the year, and now we're going to be adding the two new positions to this portfolio. So instead of it being the top 5 backbones, it's going to be the top 7 backbone ETFs. So we are going to be adding SVOL. So let me go ahead and put that in the search. SVOL. We're adding this one because we have found that on a regular, consistent monthly basis, the dividend payout on this one is a fairly high amount, and it's a consistent amount each and every month. I'm doing this because I'm finding the flaws with my JEP-E and JEP-Q is that they are very high income payers. However, they have a different amount that they pay out each and every month. It's never very consistent, and there's nothing wrong with that, but just as a group of income investors that might need a little bit of spare change each and every month to pay the bills sometimes, if we have to make a withdrawal before retirement comes, we can rely on our simplified volatility premium ETF to be able to make sure that we're getting at least we have an expected consistent amount of cash that's going into the portfolio each and every month. So let's go ahead and start our position here. I know it says I've got $160 available, but we're only using $60. Remember that other $100 is margin. So let's go ahead and put $5 into the Simplified Volatility Premium Equity ETF. And then our next position that we're adding to this portfolio is going to be the QQQ. So the QQQ, the reason we're adding this one to the portfolio is it is much like our Schwab US Growth ETF that we have in the portfolio, the SCHG. However, I had a discussion with my friend Tide Pod, and he was saying that we should add this one to the portfolio and over the long term see which one plays out better long term. He's kind of thinking that this one actually might perform better than the SCHG. And after looking at a few things as far as diversity and other expectations like that, it's possible that he's not wrong. It also, I believe this one also has a larger holding of assets, so it's going to give us a little bit more of that diversity. There will be a little bit of an overlap between the two portfolios because both of them do invest in some similar types of investments, but with this one added into the portfolio, we can we've got a little bit more diversity, and if this one grows more than the original staple, then why not add it? So we're going to go ahead and put $5 into this position as well. And there we have now officially started our position in the QQQ. And so with that, now that we've gotten the two new ones added to the portfolio, we are now going to be adding to the original top five of this core ETF of the positions. So let's go ahead and find our SCHD, and we're going to go ahead and put $3 into this one. Very good. Each and every week, we're going to get a little bit closer to that 10 share mark. And then let's go ahead and take a look here. Let's go back up to our JEP-E and JEP-Q and get our positions added to those ones. Let's go ahead and add $2 to each one of these. We want to get that income to over $1. So here in a month or two, after adding a couple dollars each and every week, we can see how quickly we're progressing on these two positions, and we'll find out if we need to bump up how much we're investing into these positions. Alrighty, so we've got our JEP-E and JEP-Q both ordered. And so that makes up for our two original income ETFs. And now let's go ahead and find our SCHG, our Schwab US Large Cap Growth ETF. We're going to go ahead and put $2 into that one as well. And then after that, we're going to find our other one, the DGRW, our Wisdom Tree US Quality Dividend Growth ETF. Another great one that pays out monthly dividends, however, and also has a growing dividend. However, it pays out an amount that's a little bit different from each and every month. So, but that's okay. This is still going to help us overall in the long term. And in the long term, when we got a bigger paycheck, it's not going to be as important that it's different each and every month. So we're going to go ahead and add our extra dollars there. Now that we've got all the core positions added, let's go ahead and see if we can find some of our undervalued positions here in the markets. So once again, this week we see that American Tower Corporation is selling for about 5% below what I initially bought it at. I really like this ETF, and I'm just fully convinced that our real estate investment trusts are going to go up in value, and that eventually the Federal Reserve is going to start cutting interest rates and making them go down rather than up, which will be very beneficial to our REITs. And that is one of the reasons why I'm very convinced that this is going to be one of the best positions in the markets, possibly either this year or next year. So let's go ahead and add $7 to this position here. Okay, and then next, let's go ahead and find our other positions here, our Albemarle. If you paid attention to this this week in the markets, you may have seen that our S&P 500 and our technology or our QQQ investment, they both were performing at about the same amount. So your technology stocks really were not doing much of a difference from what the S&P 500 is, which is kind of uncommon in a bear market. But however, if you saw what happened to Tesla, we saw that they are one of the worst performing stocks in the S&P 500. So along with that is also going to take down our other stocks here like Albemarle. That is our biggest lithium miner in the world. So even though the sale of electric vehicles maybe isn't going at the growth that analysts in the market was expecting, over the long term, this still has a lot of growth potential, and there's still significant growth coming in the years. So we're not going to let this negative news get us down. We're down about 8% on this position right now, and we're going to go ahead and add a few dollars to this one. I'm going to go ahead and add $8 here to this position. Then next, let's go ahead and see what other positions are in the market that we are down on. Our Realty Income, ticker O. This position is still around that $52 range. It's been in that area for a while. As you can see here, I'm currently down about 3% in the portfolio. This stock pays out a consistent monthly dividend each and every month, pays out the same stable amount with a little bit of growth each and every 3 months on average. So this will be a great income play that is going to be a great asset to the portfolio over the long term and help us get that income a little bit quicker and sooner rather than later. So let's go ahead and add a nice little amount of change here. Let's go ahead and add $10 to this position. Alrighty. Then let's go ahead and take a look at some of our other positions here in the portfolio. We've got let's take a look at our Service Properties Trust stock here. This is going to be this stock isn't as common as many other stocks in the market. I don't know many other YouTubers that cover this position specifically, but as you can see here, this stock has a 12.52% yield, very nice juicy yield. I am down on this position about almost 20%, 18 to be specific. And my average cost was $8.08, so I am down on this real estate investment trust as well. However, that is not getting us discouraged by any means. This position, to tell you a little bit more about what it is a real estate investment trust that engages in the provision of hospitality and travel services. It operates through the following hotel investments and net lease investment segments. The firm owns hotels and travel centers located through the U.S., Ontario, Canada, and Puerto Rico. The company was founded by Barry M. Portney on February 7, 1995, and is headquartered in Newton. The listed name for SVC is Service Properties Trust Common Stock. There's a lot more to the stock than just that little introduction, but I just wanted to kind of give you guys the intro of it because I'm sure I can't think of any other YouTubers that cover this stock. So, but anyways, let's go ahead and add to our position here. Let's go ahead and add $5. And then let's go ahead and take a look at some of our other positions that we're down on. Let's see, Lockheed Martin. This company is essential to our U.S. government and other countries out there. They are the ones that create aerospace, global security and aerospace. And they do, well, we'll just go ahead and read this here. So Lockheed Martin is a global security and aerospace company which engages in the research, design, development, manufacture, integration, and sustainment technology systems, products, and services. It operates through the following business segments: aeronautics, missiles and fire control, rotary and mission systems, and space. The aeronautics segment researches, designs, develops, manufactures, integrates, sustains, supports, and upgrades advanced military aircraft, including combat and air, mobility aircraft, unmanned air vehicles, and related technologies. I think you guys get the point. This company is a U.S. defense stock. It is essential to our U.S. military. I am also down on this position about 1.86%, so I really don't have much farther to go before I'm back in the green. And I want to keep adding to this position. As you can see, I don't own a full share of it. I own only about $62. A full share is that $4.43. So let's go ahead and add the rest of our cash into this position right here. Very good. And as we can see here, we got a dividend coming in next month for 42 cents. And so that's what we have for the portfolio this month. And then to go over our options in the portfolio, we can see here that our QuantumScape expires today, here in in a few minutes actually. But as you can see here, I sold this put last week for a total of $3. And now we're currently at $1 left. So if this option expires worthless, then I get to keep that $3 premium. And I will also get the $550 collateral back that I borrowed from Robinhood. So, and then this is my other position on options. I sold a $7 call option on Mind Medicine for that $7 mark. This option is probably going to exercise as it is above the strike price that I sold the option for. It shows that we're down significantly on it, but actually there was not really any risk to this stock. I originally bought it at about $2 a share. Let's take a look here. Our average cost was $2.74, and now it is trading for $9.17. So our shares will sell for $100 $7 a share, but we still get to keep that premium regardless of the fact that we had to sell those shares, and we are selling them at a gain. So I'm not exactly sure what we're going to do with this position yet. We might go ahead and sell some put options on it and see if we can get back into this position for just that $7 a share. And if not, then we'll just keep collecting the naked put option premiums and maybe investing that back into our mind medicine. So that's it that I have for this week for you guys. And that's the update for the portfolio. I would like to say thank you all so much for watching. Please leave a like and subscribe down below if you are new. And I will be talking to you guys next week. Thank you all once so much once again, and talk to you soon.